Welcome again to Build the Sell with JB. I'm so excited today to have my new friend, Mr. Chris Jarvis, join me. Chris is a corporate coach, financial fixer. I can't wait to hear more about that. We'll dig into that a little bit with my fixer background, and a great speaker. And I've had the pleasure of interacting with him at an event that we were both at. And Chris is also a successful author who has a number of books, probably the most popular of which, Be the Giraffe, which he was kind enough to send me a copy of, and does a really fascinating job of taking a lot of the entrepreneur and business owner's journey and turning it into a series of sort of really pieces of wisdom that's based upon comparisons with the animal kingdom. And there's some really great information in there that I think is valuable for those of us who are on a business journey. Piece that we often maybe ignore to our peril, which is the money, wealth, tax, and all of that in one piece of it. And instead of focusing exclusively on the business, maybe stepping back, or as you say, growing taller and seeing a little bit further. So more than anything, thank you so much for spending some time with me today.
JB, I am happy to be here. Should be a lot of fun.
Yeah, man. So if you would, tell me a little bit about, so one does not wake up one morning without a lot of experience and battle scars and successes and failures and all that, and decide to write a book unless you have all of those things. So what brought you to the point where you felt like, I have something that I need to say. I think I have something that I want, and you've written multiple books, but I have something that I think other people could benefit from. What's your story?
There's a lot of questions in there. So, I've written 19 books over the last 25 years. And like many things in life, we did them because we had different needs. So the first book, I was 26, 27. And the reason I did that was because I was 27 and I needed something that would make somebody who's 47 or 57 or 67 who has a lot of money to think that I was worth talking to.
Pay attention to you.
This is the late 90s, pre-internet. People would see that you'd written books and assumed I was much older than I was. And I didn't lie, but I also didn't dissuade them from thinking that I might be a little bit older. So it was credibility. I wrote the books. I wrote niche books. So we started with financial books and legal books for doctors. And niche marketing was easy because you could say we're the doctor's guys. And so I did it. I mean, that's why I did it. And variations of those books were, at an early stage in your life when you're insecure and you're putting some stuff out for self-esteem, or for whatever reason you're using it. I probably used it as a crutch for a while, but the credibility helped a lot. And those first 10, 15 books were all about demonstrating that I knew something about legal, tax, finance, asset protection, estate planning, business structure, practice management, all of that stuff. And it worked. It was very successful. As I've gotten to another stage in my life that I'm in my mid-50s, it's this most recent.
Hey, sorry. I was just doing the joke that the Kevin Hart thing that he did to that poor guy.
Yeah, old. It's if you asked me when I was 27 what I would be doing when I'm 54, I couldn't even fathom that. But the most recent book, Be the Giraffe, that book came to me in a bit of a vision. And this book, there's no direct economic benefit from it. It's just a book that people need to read. And those first books, because you're young, you're trying to, I don't know. When you're young and you run into sales, you run out and just start blabbering everything you know because you want everybody to like you. When you get older, you realize that a successful sales call is one where you ask 2 questions and listen for an hour.
Yeah.
And so with some wisdom and experience, this book is not demonstrating what I know. It's taking the 30 years of experience in entrepreneurship, in finance, in transformation, in psychology, to how do I write something that will get you to think about your life differently. So most of the content from this book is not something I wrote. It's things that I wrote and stories I told to get you to frame your life and your perspective and your things differently. And so
Yeah.
I think that's why, no pun intended, this book is head and shoulders above, above the other 18.
I love it. Yeah. When I was reading it, what really stuck out to me is someone who is very often in that sort of neutral third party quarterback role with founders who are either preparing for a longer term play exit, whether that exit means they sell to a third party, be it a PE or a strategic or whatever, or an ESOP to their own employees or some variation of those things. What really stuck out to me about the book was the idea of perspective and vision, because what I find is often owners are really good at one aspect, right? So they're a great operator, or they're a visionary and they've surrounded themselves with great operators. But even there, they're generally really good at growing a business. That doesn't necessarily mean that they're prepared emotionally or financially for what an exit might look like for them, because they have sort of put their own personal needs in wealth planning and the amount of thought that should also go into that. What's next? They put that to the side for a long time, and for so long that it has become ingrained in who they are. And they're just all about the business and thinking about other folks. And what was really interesting when I read it was this idea of perspective and vision, that you use the analogy of the giraffe being taller and being able to see further ahead and see, what else is going on around. As someone who has spent as much time as you have in your career on very intentionally looking at wealth planning and this probably estate planning and taxes, what are some common things that you find that owners don't understand or have a challenge when they think about that? Because from my perspective, it's usually owners are focused on what they get at the end of the transaction, and they're less focused than they should be on what they keep of that amount of money that they get, or how they deploy the capital that they receive. But what's been your experience?
Again, I think you've asked three different questions in there. And so there's a bunch of mistakes that people make. And one of the challenges from a previous book, I wrote a lot about what gets you here won't get you there.
Yeah.
Essentially is what the Six Secrets book was. And it was, there's a million ways to get to making $300,000-$400,000. There are not a million ways to get to 2 million. There just isn't, from an income standpoint.
Yeah.
And like, you could become a partner in a law firm and an accounting firm. You could become a doctor. You could own 3 McDonald's. Like, there's a lot of things to get you to 300-400. There's a lot of paths that are pretty safe.
Yeah.
That provided you have the education and the wherewithal and, all of that. But the thing that made you successful inevitably becomes the thing that holds you back from getting to the next level.
Yep.
And so for some people, that's, I'm so diligent. I know everything about my business. I know all the employees' names. I know the customers. I really have a good handle on this. And I'm there. I'm on top of it. I care. I'm involved, which is great. You'll never become the CEO of $100 million business.
No.
If you know all your employees and all your customers. You just can't. And so that pivot becomes the really hard thing, which is to get to the next level. You have to gamble away all of your success and try something new. And it's, different isn't always better, but better is always different.
Yeah.
And you've got to be willing to stick your neck out, a la the giraffe, and do something differently if you want to get to that next level. So I think for a lot of people, the thing that holds them back is you're really good at a lot of things. Like the business owner usually is, to your point, they're better at some things than others. That part's true. But most people who build a business are really good at setting goals, and they're really good at setting up markers along the way and then knocking down those pins. I'm mixing metaphors, but you set goals and things and you knock them down. And the problem is human nature. If you wake up with a to-do list of 20 things, it is absolutely human nature to look at what are the 5 things I can get done in the next hour. And you look at the list and everything has equal weight. And the truth of the matter is, the most important observation I've made in business, the most important observation is that a CEO, a leader, gets 90% of his or her success, impact, value out of 10% of the decisions they make.
Yeah.
And 90% of the decisions add up to a whopping 10% of the return.
Mm-hmm.
And so that's just a modified Pareto principle. It may not sound, may just sound cute, but it's the next half of this statement, I think, or observation that's more important, which is as a leader, a CEO, a manager, somebody who's trying to get to the next level, you need to identify what the 90-10 are. And then the only two things you should pay for with time and money are the advice and the time to analyze the information that pertains to those 10% decisions. And then the second part is you should pay other people to make the 90% decisions.
Yep.
And never look at them at all, because it's our nature when you're a perfectionist, and you care, is you're going to pay attention to what chairs are we putting in the conference room. Yep. And the truth of the matter is, as long as they're not, hard wood that does, as long as they're
unicycles.
Yeah, unicycle's not very helpful, unless if you're a Cirque du Soleil, but in most places like that just isn't going to fly. So you really need to focus on those things and then pay other people to do the other things. When I'm doing advanced tax work, structure, pre-M&A, whatever the hell the transaction is, estate planning, I downplay it a bit and say, you could learn all of this, but why would you? If you could pay me whatever the number is, it could be 25 grand, it could be 250 grand, it could be $2 million. It depends on the size of the transaction. I can't charge $1 unless I can create $5 of value. And so ideally, whatever's going to take me an hour, a week, a month, a year is going to take you 5, or some amount of time to learn it, check it out. When you could go create a new product, open a new market, go on vacation, take care of your health, like do something. So I find that some people, they feel the need that I have to understand how all these things work. And what they really need to do is find somebody they like, trust, and respect enough, which is hard sometimes, mind you. It's the reason why you and I are successful in the space we're in, because a lot of the people who are out there, traditional attorney, accountant, deal broker, they're transactional and they don't understand how these things are combined. So, that's a big, that's a big part of it. You asked about the wealth side of it, and I can't tell you how many people, as recently as this morning, I talked to somebody who, tail between his legs, felt badly that I haven't done the work and I haven't done my planning. I'm embarrassed. And I said, if I had a choice, if you had a choice between all your planning is done perfectly, but your business isn't making any money, or your business is throwing off $5 million a year in profit and you've done no planning, I can tell you which one of those is more easily fixed.
Perfect is the enemy of good in most situations.
100%. And that's, and I need to remind myself of that too. But getting the business up and running is great. But as you know, running a business and selling a business is a deadly combination. It's very hard to keep a business running well and work a sale to the end.
Both are full-time jobs, 100%.
100%. Just like running a business and raising money for a business, both full-time jobs. Yep. The running your business, running your family wealth, structuring all of those things to work together, you just have to find the right people to help you get that crap done, because otherwise you're going to be doing things half-assed. And that's the biggest difference, observation in my career, is realizing that multitasking really means you're doing nothing well.
Yeah. That was also the hardest lesson for me. And
right.
This conversation, the direction it's going is funny, because every lesson that you just described is a hard and often painfully won lesson that I've learned myself. And that you really, when you decide, I don't know if this is true for you, Chris, but when you decide to get into the field that we're in, where we're really kind of acting as a Sherpa of sorts to other folks who are trying to do the thing that we have already done or have helped other people do, the only reason that you do that, it bothers you to the core to see if you can avoid it, to see folks go and make mistakes that you have made that did not turn out well unnecessarily, only because they believe that they have to do it alone, or, to your excellent point, they have not yet realized that kind of Pareto principle situation. And that's the difference. And I can usually take the verticals and niches that I've worked in with exits and businesses that scaled, and I can pretty much tell based upon the revenue number, and if it's still being run by the person who founded the company, exactly the problems that they're likely running into right now because of exactly what you said. It's what it takes to get from 0 to 5 million is one thing. And usually those founders can actually grow they can become the thing that is required next to get from 10 to maybe, or 5 to maybe 15 million. That seems to be the band. Interesting thing happens at 15 million though. Usually the founder will say, and I don't know why it's this number, but it almost always is, oh, things are going well. We're profitable. We have figured it out. We've systematized, everything's running smoothly. Now I want to get to $100 million. I don't know why that's a number in people's head, but it is. And oftentimes I'm in the sort of agitator position where I'm trying to say, are you sure? Why? Why do you want to do that? And are you sure that you're the person who can do that? What do you mean? I'm like, well, the thing that needed to be true in order for you to grow from 0 to where you are today. Here's what you were, and here's what you mean to the business. To go from where you are now to $100 million, you're going to have add entire departments that you don't have, which means that you are no longer going to be able to do 80 to 90% of the things that you do every day. And you're going to have to become good at leading and delegating and looking at a much bigger picture than you're used to looking at. And I'm not saying that's right or wrong for you. I'm saying that it's a much bigger transition. And usually the person who brings a company from 15 to 100 is an entirely different person than it was. So maybe you just bring someone else in. But these are conversations that you have that initially folks, they may viscerally know that what you're saying is true, but they don't always like to hear it. Right. And it's hard. It's a really hard, sort of transition. So I want to dig in a little bit into something that you said about when owners are trying to figure out, all right, I believe in this idea of, 90-10, and I have to figure out what my 10 is. Like, how do I figure out what are the 10% of things that are so important? And the way that I describe it to folks is, what are the 10% of things that only you can do within your organization? They really have a hard time figuring out going from here, trying to get my camera frame here to down here. How do you think, what's the best way for folks to even begin that process?
I think you have to look at your business and start with what is it that makes you special? Because everything about your business is not special.
Right.
You can have a great distribution. You can have a great product. You could have a great service. You can't have all of it. It's just not possible. So when you figure out what you have that is unique to you, whatever that might be,
yep, then
you want to lean into that, or you lean into what's terrible about everybody else in our industry and how are we the opposite of that. And the decisions need to be that. Maybe it's structuring a deal. Like, I just signed a deal for a TV show. The guy who was the executive producer, just hired an executive producer because his best use, the former producer, was to go out and sign deals so that these shows will all be syndicated on more channels, because that's a big deal, right? If the show reaches 100 million homes instead of 35 million homes, that's a whole lot more important than, did we get the lighting right? Did we get the right guests? Did we charge the right sponsorship? Like, there's some things that are just in a business more important than other things.
That's what great, sorry to interrupt you, but I just was struck by it. What great self-awareness by that EP that not a lot of people have.
Yeah, well, it's just, and then hiring somebody not inexpensive to say, come in and do it. And then interestingly, Todd has a great eye for this, having been a newscaster. So he's changing camera angles and doing stuff and just increasing the production value. And you're thinking, oh, I had to do this. I mean, I had to overproduce the show because I'm the guy,
right?
Not realizing there might be somebody who can actually do it better. So one of the questions we ask a lot is not just what can you only do, but who is the person in the world that can do everything you do better? Like, not all of them, but it can be a different person for each of the 2 or 200 things you do. And the goal is to find people to do that. In my organization, I'll push the people. In the last company I sold, and with the firm I'm building now, I've said, if there's something I'm doing today, we have less than 2 years to get that off my plate.
Yeah.
And no matter how big a transaction is, something that's worth $10,000, something that's worth $1 million, something that's worth $5 million, whatever it is, somebody needs to graduate to be able to take that off my plate, because the opportunities, as we grow, there'll be more opportunities. And so whether that's scale or distribution or whatever it is, you should be looking to grow all the time and exploring other things. So I think usually the things that the business owner has to be thinking about is the things around exit or succession, because those are the things that have the most value. Like your mind should be in the CFO conversation, which is not the accountant. The CFO is supposed to be a creative financial officer who's finding new sources and uses of cash. How do we increase the value? Things like that. So like that, you've got to be thinking strategically on things that have a potential to add certain value. I'd even go so far. You can put a line for some companies, like the CEO is not going to talk about it. Look at anything that doesn't have $1 million impact, or $100,000, or depending on the size of your business, $10,000. Whatever the number is, it certainly doesn't include which whiteboard do you want. Like you might have a certain one you want in your office. Like these are two choices, pick one. That decision is 3 seconds. Not, like, let's go look at all of these and figure out the price. It's just not, whether you paid $700 a whiteboard or you paid $900 a whiteboard isn't going to make or break the decision. Certainly not for you to spend $10,000 worth of your time. So that's
not at all.
That's a big. Early on in the book, I have an assessment called the Wow Factor, which everybody can take for free, and we'll put a code in the show notes, and
we'll put it in the notes.
All that, and but it helps people identify, what are you sacrificing? Because everything we do in life is a sacrifice.
Yeah, there's a cost.
You listening to this podcast it's everything else in the world you could be doing other than listening to us.
Yeah.
And what I found when I came up with this quiz, this assessment, 20 questions, 4 minutes, and it measures your life from finances, health, career, relationships, and fun. And what becomes abundantly clear when you get the 19-page report is, wow, there's nothing I can do that's going to improve my career, improve my finance, improve my health, improve my relationships, and improve my fun. The relationship one is obvious because this is improving our relationship being on the show, but it's not improving the relationship we have with any other of the 7 billion people on the planet, because we're not talking to them. So for me, once I realized that everything I did was a trade-off and a sacrifice, I stopped worrying about what I was missing. FOMO was gone, because I realized every single thing I do is going to be negative in multiple areas of my life. So I'm just going to embrace what it's positive. And sometimes I'm doing something really healthy. Sometimes I went out for a friend's 60th birthday dinner last weekend. I was up much later than usual. I ate and drank things I wouldn't normally eat and drink. And the next day I didn't feel great. Like physically, I was not on my best, but I had a great time. So I went out to celebrate someone who's really important to me, and we had a good time. And I didn't feel badly the next day that, ooh, look what I did to myself. I knew the trade-off was coming, so I gave myself some grace. I didn't pile on. And so I think that comes into business too, which is everything you do, time you spend with the sales team is time you're not spending with the investors. And time you spend with investors, you're not spending with vendors. And the time you're spending with vendors, you're not studying trends, or you're not at, other research, other industry conferences trying to learn what other people are doing. So you've just got to find some things, jump into it, as best you can, and try not to worry about. The worrying about everything is a surefire way for you to have a heart attack and overmanage the hell out of your company into the ground.
Yeah, I just had a conversation yesterday with a newer client, and they're in a high-end sort of men's jewelry, we'll say that. And I'm just asking them the very basic onboarding questions that I'm going through. Like, what's the end goal here in 3 to 5 years? I know that you want to exit, but why? They're like, well, not giving me a clear answer. I'm like, okay, but specifically, why do you want to exit, and why do you want whatever amount of money it is that you want? And then let's say we, in a frictionless world, nail that. What's the first thing that you're going to do the day after closing? I don't know. I haven't really thought about it. Well, you need to, because 75%, according to Vanguard, of business owners who sell their business 1 year later, quote, deeply regret it. Not because of the money they got, but because of the change in identity that they did not anticipate happening to them. The moment that they go from being all of the things to all of the people that they were for however long they did it, and putting out the fires and that adrenaline rush that we get and the addiction that we get to all these different neurotransmitters, to all of a sudden one day you wake up And none of those things about you and your identity are true anymore. And that's terrifying for a lot of folks. So I really try to work people through, do you really want to exit? And what does exit mean to you? Because the assumption is that it's a sale to a third party. That's what most people think. What if what you really want is just an exit from something about your business or the way that you're interacting with it or that you're running it that you just don't like, that doesn't work for you? That is also an exit. We could just solve that problem and you don't have to sell it at all. Or another thing that you said that was really also applicable to these folks was that the gentleman told me in the conversation, is you were talking about Black Friday, so if you're selling any kind of direct to consumer product, I don't care how big you are, Black Friday is a big deal, and it is to them. And so I was just loosely trying to understand, what's your Black Friday strategy? Because one of their biggest issues is cash flow, because they're in anyone that's selling anything, almost the worst thing you can do is sell too much of it. And if you're not prepared to fund the inventory purchase that you then have to make to deliver that product, you can run yourself out of business really quick. And they're borderline. So I said, well, what's your plan? He said, well, we kind of figured out a marketing strategy we think work. I'm like, what do you mean by we? He's like, well, my partner and I. I'm like, so you don't, at your size, you don't have a marketing director or even a fractional CMO. No, we think we're going to hire a guy in January to do that. I'm like, okay, well, you think or He's like, well, he wants to charge $10,000 to do our annual, marketing plan, and that's $10,000 we could save. And maybe in me, I said, no, it isn't. He said, what do you mean? I said, it's not $10,000 you can save. Based upon everything else that you've told me that you need to be really focused on, that's $50,000 a minimum that you're going to cost yourself by making that decision of trying to do it yourself, when you could just pay somebody who's competent, give them general direction as to what you're looking for, and then leave and go do what it is that you really need to be doing. Because do I think you're smart enough to figure out all of the nuances of the strategy of the email sequence, the particular media strategy you need to use, how much media you need to buy? Yeah, of course, you can figure that out. It's going to take you 3 months and you're going to make a lot of mistakes and it's going to cost you a lot of money. Or you can just pay someone. But it is, Chris, you're right. It's so hard for folks to, one, realize that when you scale, there is a way, and it's also necessary, to thoughtfully remove yourself from things that no longer should be taking your attention. And to understand that, here's a crazy thought, often subject matter experts within different buckets that we touch in our business, they're better than us at it. They really are better than us. There's I can't tell you how many times I've held on to something too closely and too long. And when I finally find a person that I'm like, okay, I'm going to put this person in charge of this. And it takes days for me to be like, well, they're way better at this than I was. Why didn't I do that?
Right.
Months ago.
The other thing is we've all, just to interrupt you, that we met through a networking organization, and it's so important to find people, to be around people, not the people who are trying to sell you, but the people who've already been down the same path. So if you and I have worked together or we're working together and you say you need somebody to publish your book, you're going to ask me because I've published a bunch of books, and I'm going to give you the lowdown on who I've used, price differential, how they work, what you'll get out of it. And then someone you've seen who's already been down this path, albeit everybody's situation's a little different, but you need somebody who's not the salesperson to give you some third-party recommendation, validation of, these are the people I used. Like, I'm a tax guy, but I'm not an accountant. I don't file returns. Every single client I meet says, I'm not sure I like my accountant. And I say, okay, well, I'm happy to introduce you to some people. I don't get a fee. This is separate. I just want you to be happy or comfortable or whatever it is, or have reasonable expectations, that to find those people, to just look on Indeed or LinkedIn, I don't know that you're going to find or listen or check out your Instagram DMs to see who's pinging you for something. Like you got to find, you got to be in groups with people who have been down that road. And that's part of networking. That's part of being in your Vistage, your YPO, your masterminds, whatever you're in. You've got to find some people that you spend some time with and you trust, and then like that will save you a lot of time. Because otherwise,
It
if you
will.
just, at our age, we remember the yellow pages. A lot of people might not know what the hell that is. But
I said Rolodex the other day, and everyone in the room,
yeah.
it occurred to me immediately, was under the age of 26 and had no idea what I was talking about.
Zero. They're like, oh, you're like a walking desk? Like I have one of those. No, not a rolling desk. I have it's a very different, so some of this is letting go of some of that stuff and being around people who can help you just shorten that path. And so whatever that is, sometimes it's letting somebody else do the work. Somebody's letting somebody else make the choice. There's something to that. And the other question, going back, you talk about asking the question that for me with clients, it's not, I do ask the question about the size of the business and how much they're making and what they want to make. And I'm trying to judge if there's a big enough opportunity that will make sense for them and for us to help them. But the next question for us always, there's a few questions similar to yours. One is, why do you want to do this? And then what will this mean to you if you can do this? And then the next question after that is, are you sure that will happen? So some people say, oh, if I grow to this side, then I'll have free time. No, if you go to that side, then you're in more meetings. So that may not be the right thing. So, I like to ask, why is this important to you? What do you think it's going to do for you? Is that true? And then I'll also ask, is there another way to get to that outcome? And you're right. People have this $100 million number. Without a doubt, it's so crazy on how much power that number has that I've had clients have offers to sell for $90 million.
No, absolutely not.
Right, 70 to 90, and they say, I'm not sure. What are you not sure? I'm not sure because I think it could be worth 100. And you're successful and you've built a 60, 70, 80, $90 million business because you're competitive and you work hard and you're smart and you probably, and you won more negotiations than you lost. Like that's all true. The problem is, I'll go back and ask the same clients, how much money do you need to do everything you've ever wanted to do?
Yeah.
And we figure out, well, I want to put my kids through college. I want to give them a house. I want to pay for a wedding. I want to be able to have money to stake them in their first business. I want to do the same thing for my grandkids. I want to do the things for my nieces and nephews. Okay. I want to travel here. I want to travel there. Fine. The toys, got it. Add it all up. And we go through the exercise of adding it all up.
It's $22 million.
I was just going to say it's $30 million. So right. It's yeah. And then it's usually $20 to $30 million.
Yep.
And then I say, okay, let's assume the market's irrational. We want to give ourselves, let's give ourselves a $10 million. Let's assume that we're off and the 20 is really 40. The 30 is really 60. Okay.
Yeah.
So I need 60. Fine. You need 60. The offer on the table is for 90. After tax, the 90 is going to be 70 or whatever the number is going to be. You got 70. We guessed we needed 60. We gave you a $30 million, $30 million buffer. And you got 10 more on top of that.
Yeah.
And you can still go work and consult. And you still have, we're not cutting off your arms and legs and, blindfolding you.
Conservatively invested even.
Right. Yeah. And the money can invest. And you're going to want to be, if you build a company of that size, someone's going to want to hire you to consult. You'll have opportunities. So, but you want it to be 100. Yeah. It's like, dude, you've already won the game. This is a baseball game and you're up 4 runs in the bottom of the 9th and you want to keep hitting. And what you don't realize is you can only get hurt.
Yeah. It's an ego thing that hits all of us if we're not careful.
And you've already won the game. So it's not about this other person taking advantage of you. It's if we hit the number, there is you should just move on. But that's because they're caught up in the number. They haven't answered the question that the reason I'm selling is because I'm going to use this money and I'm going to invest in building up the economy of rural Pennsylvania where I grew up or rural Texas. And I'm going to reinvest money into this. And they haven't attached, it's their identity. So losing is losing any negotiation is bad. And they haven't attached the sale to what am I going to do with this money, with the income, and with the impact and with the influence that I'm going to be able to have coupled with the free time. So now I actually have opportunity to do something with the impact and the influence that I have. And, I spend a lot of time with people. Let's get to what that thing is so that the planning is not a money conversation. The planning is about how do I get you to the thing that lights you up. That This is what you were put on this earth to do, is to build artificial limbs for amputees in third world countries. It's for you to help teach kids how to read. It's for you to help whatever the thing is, save the whale, like whatever your thing is that you want to put the time and money in, create jobs, create opportunities, create financial, social equity, whatever your thing is. Like if we can get to that impact, then what I try to move toward the identity is the identity of the project that happens after the sale, not the identity being attached to the tasks and the widgets and the SaaS building and whatever else is going on. And it's a lot of work, to
It
get
is.
somebody out of it. It's a ton of work, but it's so important to get to that. Yeah. I mean, you and I know we're in the same church, same pew. We're next to each other, so we're looking at this thing the same way. But it's so important to know why you're doing things. And that's part of the Be the Giraffe, is getting your head out of the weeds and just asking yourself, of the things that I'm doing, what am I doing? Why am I doing it? Is it still serving me? And is what it's serving me something that's still important to me and more important than the other things that I might want to be served to do?
I said to a client 2 years ago who was stuck in this hamster wheel and this real prison of his own creation, trying to continue to scale. And he had already scaled past double what he ever intended to in the first place. And he just kept going and kept going and kept going. And knowing him the way that I did and having seen the journey, I also saw health declining, both physical and mental, low emotion, just not the best path for him personally in terms of the way things were going. And had a heart to heart with him one day. I said, "Why are you doing this?" And he just sort of spit off metrics. "Well, I hit this metric." And then, "Okay, well, what about when you do? And what about when you get to this value? What about when you get this amount of market share? Like, is it really going to meaningfully change?" And I finally, after listening, a little bit of back and forth, mostly me listening for about an hour, I said, "Hey, can I have your permission to just really tell you what I think is happening?" And he said, "Yeah, of course." So I think you're trying to win a race feverishly that you never intended to join in the first place. But now that you're in the race, you feel compelled to try and win it anyway. And the real question I have for you is, if 5 years ago I had told you, "Hey, there's a race, I want to put you in it, I'm going to win it," would you have cared at all? And he said, "No," and I don't think I would have. And I just let it sit for a minute. And it was weeks that this took, but he did. He finally got to the point where he realized, "You're right. I got so addicted to the status in the business, hitting these goals, hitting these objectives, then moving on to the next one and taking no time to think about how that impacted the overall life that I want to live and the meaning and purpose that I have as a man, as a business person, that I lost myself a little bit," which happens. It's happened to me. I don't know if it's happened to you.
Me too.
And so that's the time when something you said a little bit ago, I think, is crucially important. It can be an advisor. If you find a really good one who you resonate with well, and you have a good rapport with, someone like you, someone like me, someone like the hundreds of other folks out there who I think probably do a great job. But you can also have the space in your life to consistently connect with other entrepreneurs who you respect, whether or not they're in exactly the same vertical that you're in, or even whether they're at the exact same gross revenue level that you are. That's less important to me than having the ability to consistently get into rooms filled with authentic conversation in private with other business owners who are living that life. Because most of us would admit that if you asked us in candor, we feel lonely sometimes because what we do is quirky, and most of the world, the general population, thinks it's insane. If you really describe a day, week, month, life of an entrepreneur and the sort of emotional and financial cycles that we willingly go for and the depths to which we will go to not work for someone else, it's a little sociopathic. We're a little crazy. We're a little different. And you can feel misunderstood and you can be misunderstood. And so putting yourself in those rooms with enough people who can gently or not, depending on who they are, point out something like this, like, "Hey, you find yourself trying to win a race that you didn't mean to," or you nailed something earlier. "Hey, listen, the reason that you're struggling with having 3 failed exits with the same business is because you let your lawyer or accountant be a lead on the deal and negotiations every time. And you have literally just empowered people whose entire existence and job it is to find reasons to say no,
Right.
to create a yes scenario. Doesn't mean that they're bad, it means they've done what you're paying them to do.
For sure.
Maybe you should consider paying an investment banker whose job it is to find a way to say yes. That sometimes is better coming from either a really trusted advisor or another entrepreneur who's been there and who understands, like, hey, you can keep banging your head against the wall if you want. I'm going to love you either way, but maybe we should stop trying that.
Right. Yeah. Well, listen, there's, I did a 2-day retreat for a bunch of people, and one of the questions that came up in day 2 was, how do you handle family that isn't supportive?
Great question.
And I asked the people, how many people, 40 people in the room, and I think 37 of them raised their hand that when I said, how many of you get negative feedback from your family on your business, your success? And that was their perception. And I was like, wow, I didn't expect that number to be so high. That was an interesting thing, because if you ask, when I asked my 100 best clients, that wasn't necessarily the same 40 in the room, but for the last 2 books, for Giraffe Money and for Be the Giraffe, if you remembered your best idea. And of course they looked at me like I was an idiot, because of course they remember their best idea. It's the thing that paid for, everything. And I said, okay, but do you remember when you had the idea? And they gave me the same stupid look, like, you're an idiot. How many more dumb questions are there going to be? And I said, okay, do you remember what people said to you when you shared it? And a different look came over their face, and their body language changed. And 100 out of 100 people said some variation of, when I said, what did people tell you? Or how did they respond to your best idea? Your wife, your husband, your brother, your sister, your mother, your father, your kid, your business partner, your colleague, your advisor, your attorney, whoever. And to a man and woman, every one of them said the answer they got was, you're effing crazy.
It's never going to work.
Yeah. And it's not because they don't believe in you. It's because the people close to you don't want you to have pain.
Yeah.
Right. What's the last thing your mother says to you before you leave the house? Be careful. My mother says it to me now. I get on a plane. Like, I have 2 million miles. I've flown all over the world. Like, I know how to navigate.
I still have to text my mom when I land somewhere.
Yeah, right. Because she worries, and I'm the same way with my kids. And so it's like, she doesn't say it because she doesn't trust that I know how to navigate an airport. She says it because she worries. And so a lot of times the people are, as an entrepreneur, you have to take risks, which makes this lonely. Like, you have to take risks, and then you have to let the people know below you or around you that you got this.
Yeah.
And so it can be risky. And there's time that you're like, I have no idea this is going to work. Some things you're sure they are, and they may or may not be. And some things, you just have something different. So the people who are looking out for you are going to tell you, don't do this. So the attorney, to your point, the attorney's job, whenever I come up with a strategy, especially if it's a tax strategy for some very wealthy family or successful business, the question I'll get is, what's my accountant going to think of this? And what the CEO is hoping for is there's going to be some mass consensus.
Yeah.
And
he's probably going to hate it.
That's exactly what I say every time. I said, he's probably going to hate it. And he says, well, why? Because it doesn't work? I said, no. Brother, look at the math.
Yeah.
This guy's been your accountant for 20 years or 2 years, whatever it is. You just met me. I've come up with a different structure that might save you $2-3 million. It might increase your enterprise value by $2, $3, $5, $12 million. I might save your estate 20, whatever the number is. I said, if it works, who's your favorite person? It's going to be me. And if it doesn't work, you're going to blame him or her for not protecting you.
Right.
So you're putting somebody in a high risk, zero reward situation to ask them. And what I find is that some advisors are great and they're curious and they don't know. And they say, I don't know. I'm curious to look at it.
Yep.
But when you ask somebody else, what do you think? That's like asking the doctor, what do you think of this condition? Like, I don't know, you got to come in the office because I can't take on doctor-patient, liability and not have you actually come in and we do the labs and, I need to get paid for this too. So it happens a lot. And it's not because things are bad. It's just the nature of when you're an entrepreneur, there's just everybody's worried for you because they're not as comfortable with uncertainty as you are. Like that is the entrepreneur who is absolutely comfortable with uncertainty or delusionally optimistic.
Yeah. And you do, some people are born this way, but I don't think it's that many. I think most of us, when it comes to risk tolerance, really, you just over time, it's like boiling a frog. You take incremental risks and calculated risks enough, and starts to feel more normal. And so you become far more comfortable with risk than the average person is. And I loved your point about the people in your life who, maybe are the closest to you, whether they're a paid advisor or whether they're just a friend and family. And oftentimes you get some negative feedback on something you might, either whether it's a business decision that you're making, a big, hairy, audacious goal, or even if it's a personal lifestyle purchase, you can get some negative feedback. And I think it's easy to stigmatize that and to say, in the entrepreneur circle, it's easy to say, well, those people are not for you. And I love what you said, because I don't believe that. I do believe that most of those people, it's exactly the way you put it. They do want the best for you. But the nuance is, any human being can only advise you through the lens of which they understand the world, their experiences and their biases, and then to what we're talking about, their own risk tolerance. And the reality is, you always have to look at who's giving you the advice, what it is that, whether it's solicited or not, and what it is that you're trying to do. And just quietly in your mind, ask yourself, do I just honor this person by saying, thank you so much for that, and move on? Because in your mind that they're not in a position to even offer you good advice about the thing that you're trying to do. Or is it something that you maybe should pause and listen to and really reflect and say, when men, especially, I always say this, don't sleep on the intuition that your wife has when it not necessarily always comes to the ins and outs of your business, but when it comes to who you are and how you're showing up and the decisions that you're making for the future. Because the reality is, they often have far more intuition and understanding about how aligned we are with who we really are than we do.
I
And
agree with that.
so that's one of those areas where with men, especially, just because you know more about the specific ins and outs of the business and where you're trying to go, which is really undeniable, does not mean, that's why I won't do an exit plan. The initial meeting for an exit plan, if a man is married, I won't do one if she's not there ever.
Yeah. That
Period.
makes a ton of sense. And it's,
which they think is very strange, but I won't do it.
yeah, you're going to get to the more important underlying issue that way. I have a story that may help some of the audience with that. How do you frame advice? And so I went most of my life being extraordinarily codependent, taking care of everybody else's needs to my own detriment, my own company, my clients, my customers, my investors, whoever it was, family. And I got remarried. And after a while, my dad was I had a great relationship with him, and he was a wonderful, gave me a lot of advice in the second half of his life. And I remember telling him that I was going to adopt my wife's 2 kids. And his response was, "Are you sure you want to do that?" And he worded it in a way, but I could tell that there was not a lot of, he wasn't endorsing the idea.
Yeah.
And I talked through it a little bit, and he called me the next day and said, "I'm really sorry. He's like, I love the kids. I don't, it's none of my business. You know best. And, I'm a jerk for saying it." And I said, "Dad, I appreciate the comment with the love and intent that it was made.
Yeah.
You were looking out for me, and taking on additional responsibility is me moving in a direction that isn't healthy for me. And you showed concern for me. I didn't take it as you're disagreeing with me. I didn't take it as you don't love my kids.
Yeah.
I took it for exactly what it was, which is you were concerned for me, and me adding more, popping more nipples and more puppies, right? Like, let's just create more opportunity to have to take care of more people, which means the more people I take care of, the less I take care of myself. And you're just looking out for me."
Yeah.
And that's truly how I felt at that moment. I really had a vision of, it isn't the advice. What somebody says means nothing. The intent that it's given is really what matters. And if you can understand everybody's doing the best they can with whatever they have, at the time that they're doing it. And I appreciate that he's looking out for me. Like I really wasn't hurt by, I don't need him to agree with me. But I appreciated that he was looking out for me. And that's just how I framed that is you're looking out for me. That's all I need. Like that's what the question was based in. And, I think that's helpful, like to get to that place and look at what's really meant by the things that are said, not get caught up in what's actually said or how it's said, because you can get into nasty, you can spiral into some nasty stuff.
Well, and the intent behind the advice, I'll share a story as well. And it was the other way around, where every now and then I'll have someone approach me who, wants to exit, and they don't necessarily need me to do a 3 to 5 year exit plan. It's more of a traditional M&A exit where they essentially want me to act as their investment banker, and I'll do that. If the business, I vet it and it's legitimate, the numbers are real, it's a solid business, and I believe that, it has pretty significant value on the secondary market to a third party. And so this one passed all those tests. But I always go through an exercise with the owner or owners themselves. That's really the human aspect of what we've been talking about. It's like, okay, well, tell me about your life. Tell me about what makes you tick. What are you going to do after this? Why are you doing this? Where did you come up with the amount of money that you needed in the exit? And this was a young guy, 28, and he had done this unbelievable job of building a company that, conservatively, I thought was probably about $15 million is what he would get. He wouldn't get that all in cash because it was most likely to sell to either an aggregator or a kind of a mid-sized PE. So, half of that would have been cash. Still, this was a guy that in discovery figured out had been paying himself $100,000, $150,000 a year ever. So really significant difference potentially overnight when that deal closes between what he's used to in his lifestyle and the lifestyle that he is now going to have available to him. Here's where it gets interesting. I ended up turning down representing him. And here's the reason. When I asked him about his life, he wasn't married. He was living a lifestyle that is unsurprising of someone that was his age in terms of what he was doing. The first thing he said to me that he wanted to do with the money was to buy a McLaren. He wanted to buy a mansion in Miami. And he wanted to start his pseudo business that was just hosting parties. And I said, I'll call him John.
This money will be gone in 9 to 18 months.
Yeah. So I'll call him John because that's my name. I said, John, I can't represent you. He said, what do you mean? I'll pay whatever your fee is. I said, it's not about the fee. At the time, I said, I'm 43 years old. And when I was your age, if I had been presented with the same amount of money, I was probably younger because I met my wife younger, but if I had been presented with the possibility of the amount of money that I can get you, I probably would be making some of the same decisions that you're going to make. But here's what I think is going to happen. I think if I get you this money, I think I'm going to ruin your life. I think I'm essentially handing a loaded gun, and I was really direct. So I think I'm essentially handing a loaded gun to a toddler. And I don't want to have to go to sleep at night having profited off what could potentially be your destruction. Now, if you're willing to work with me for a few years and continue growing the business and also work on some other stuff, I'm in. But if you just want to exit right now and you want the maximum amount of money, I'm not your guy, because I wouldn't be able to live with myself because I'd have to watch what I'm pretty sure I know is going to happen. He did not like that. He didn't enjoy having the conversation with me. But here's the darndest thing. He sold it. Didn't get as much as I probably could have gotten him. He did okay, but who he used probably didn't have the relationships that I did with some of the PEs. But he sure enough did all those things. And what was the number that you said you thought that he would be?
I said 9 to 18.
Yeah, it was 11. 11 months later, not only was he broke, not only had he gone through it all, he ended up in rehab. And I don't share that story to make myself look brilliant or to shed light on it. I share it because in that moment, I had to make a decision. I can make a big chunk of money, and what happens to this guy after that is not my problem. But in doing that, I would have to consciously decide that the entire value system I have and the reason why I do this, I'm going to throw out the window. And I just didn't have
for money.
Yeah. And I didn't have peace about it because and people say, well, he was going to do it either way. Right. Probably. But what if what I had said, and because I've had folks that went this way, and what if I'd said, you know what? Yeah. Okay. This guy's been there, done that. Let me at least listen to what he's saying and reflect on it. And maybe I'll take his advice and maybe I'll put a pause on it. I at least had to give it a shot because you've been around long enough and you know that when you hand someone that much money who's never had it before, unless they're unbelievably grounded and wise, probably not going to make the best decisions. How do I know that? Because I know exactly what I would have done.
I was going to say, because you were a 28-year-old man once. That's why it doesn't take. Like, that wasn't a real tough mystery, Sherlock Holmes.
No,
like, I get it because we were all there. That's even the wisest 22-year-old is still a 22-year-old.
Yeah.
And that's just part of it's life.
But that's another reason why, if you're listening to this and what Chris and I are saying resonates with you in any way, whether it's one of us or whether it's one of any hundreds of folks out there who could give you good, solid advice professionally, or just someone who you respect who's been there and done that, take them to lunch, run them through what's going on with you, and be open to and give them permission to give you their honest feedback and take it for what it is. I don't think you'll regret it, and be willing to be a little offended and try to put that to the side. I've got a whole group of folks who are completely free to say whatever they need to say to me, and you would think that, and I bet you have this too. You would think that the higher level someone gets, the less likely they are to have people in their life who can speak to them the truth. And it's generally the opposite. Usually the folks who have the most success over the longest period of time make habits of trying to find, and it's hard to find, but try to find those people who really do care and have your best interests at heart and have the stones to say, ooh, maybe that's a good idea, but what if it's not, and here's why.
Right. Well, I think the good advice you get too, people who, as you mature, you take it differently, but as you ask more mature people for advice, you'll realize that advice often comes in the form of a question, not in an edict. And it's have you thought about this? What might happen if this? Are you sure this is there? Have you considered this thing? Are you like, those are the, or they'll give you a parable like that, that you just try to help people. Try not to make it a commercial, but there is something to letting people, the movie Inception, and it's got to be their idea. If you tell the kid what's going to be there, it's one thing. If you ask him a question and it becomes his idea, are you trying to create short-term wealth? Are you trying to create multi-generational wealth? Yeah. I got to think about that for a minute. And then, so what you're telling me is they're two very different strategies. Okay. Okay. Now I got to think about it. And just stopping. Again, I wrote that book because I just wanted to reach more people and get them to stop for a minute and ask themselves, what am I doing? Why am I doing it? Is there another way to do it? What can I, and I shouldn't be afraid of doing something differently.
Yeah.
And that's, it's just stop and just be, they say be present, but to me, what being present means is I'm actually looking at the things that I do, the people I'm with, the places I am, and just asking, not second guessing, but just asking, like, does this still work for me? Just because I've done it for the last 2 weeks, 2 months, 2 years, 2 decades doesn't mean, maybe it still is good. But if you look at it and it's good, then you feel even better. You don't have the regret of, I wish I had gone and done this. No, I've already checked this out. I'm really happy living in Atlanta. This is where I am, and this is what I got, and this is the story. Great. You could afford to live anywhere, but this is kids, grandkids, family, friends, all that. Like, yeah, fine. But you stop and ask yourself, why are we here? Not just because inertia gets us, time just disappears.
When we're allowed to change and evolve as human beings, right? You don't have to paint yourself into a corner. And the thing that was important and valuable and satisfying and meaningful to you 4 years ago doesn't have to be the same thing today or 4 years from now. So, man, really great advice. I'm going to put links in the show notes for how you can contact Chris, how you can interact with him, how you can work with him. He's got a really cool tool that you can go on and you can do a quick little set of questions and it will spit back at you sort of where you fall on some of these ranges that we've been talking about. But more than anything, I just want to, just thank you and honor you for writing a book especially a book like Be the Giraffe, taking your experiences and doing it for the reason that you have done it. We need more of that, not less. I want to honor that you took the time, and it's not easy to write a book. I'm trying to do it now with mixed results, but the fact that you took the time really as a labor of love to try to give and to give of yourself and to give of your experience and to maybe help some folks who are in it, as I like to say, and just trying to figure it out. I really appreciate it. And I certainly appreciate you taking the time. And I hope that this won't be a one-off. I think I'd love to have more conversations with you.
We definitely will. It was great.
Thank you, my friend.
Thank you.